What's up, everybody? Welcome to the Stocks channel. My name is Corey and welcome to your daily stock market technical analysis update. We saw the stock market do really well today and it looks like stocks are ready to continue to climb higher. Before we jump into the charts, please help me out by smashing that like button, and if you're new, go ahead and subscribe so you can follow along with all of my daily updates. First up, we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we saw the S&P 500 SPY ETF close up 0.6% today, and we're back over that 5 EMA. And we're still playing games with that magenta trend line, which is telling us the more time we spend up here around these trend lines, the more bullish the stock market becomes. Remember last time we broke above that trend line? We had a quick correction, and now we've broken above that trend line and we're just hanging around. So the longer the stock market hangs around and consolidates above and around this trend line, the stronger the bull case gets, because we've now broken out of this sideways consolidation and the stock market looks like it's ready to start heading higher. So we see we had that really nice impulsive move after the election, and that tells us that the direction is going to be bullish, and now we're just correcting that impulsive move for a wave 2 before we start into a wave 3. So this is a very bullish setup for the stock market, and we are expecting to see the stock market continue to head higher. So as we start to head higher, our first resistance we're going to run into now that we're over the 5 EMA is going to be this previous high, which is right around $363. Once we take out that level, it will confirm that we're in a wave 3 and we're going to start heading higher. So we see very strong bullish trending on the S&P 500. All of these moving averages are still very strongly trending to the bullish direction, and they're all sloping upward. That bullish trend is a force that continues to push prices higher, and we have bullish price action closing back above the 5 EMA. So with bullish price action and bullish trending, we are always going to remain bullish because there's no reason to try to go against the trend and try to go against the price action. We see the S&P 500 did look like it was finding support right around that purple trend line, and it is holding up above that trend line. We have been playing games with the magenta trend line, and we've been closing above and below and now back above, but that purple trend line is definitely looking like it's holding up as support, which is above that 13 EMA. So the S&P 500 is looking really strong, and it looks like it's ready to continue to climb higher. On the NASDAQ 100 Triple Qs ETF, we're back within our consolidation wedge, and we're back below the 5 EMA. So the NASDAQ 100 is by far looking the weakest, with the S&P 500 and the Dow doing pretty well with vaccine news. We still have bullish trending though, with all of these moving averages still sloping to the bull side, and we have the 5 EMA still trading over the 13 EMA. As long as that 5 EMA stays above the 13 EMA, I'm going to remain bullish on the Triple Qs, and I'm expecting to see the tech sector start outperforming soon. We have a lot of positive vaccine news that's really driving money out of tech, which have been the high performers in the high flying stocks, and they're starting to rotate money into industrials and financials and consumer cyclicals. So we're definitely seeing things like the Russell 2000 doing really well while tech suffers, but the tech sector will eventually break out of this consolidation, and we'll be looking for tech to break back up to 294. Once we get a daily higher high close on the Triple Qs back above 294, that'll be a sign that the bull market is back, and then we're going to start looking to our upside price targets of $300 and $312. Those are our price target 1 and our price target 2 as soon as we start getting up and breaking above this 294 level. So we still have strong bullish trending, and we still have price action trading above the 13 EMA. So overall, the NASDAQ 100 is still bullish, even though it does look weaker than the S&P 500. Jumping over to the Dow Jones Industrial, we're back to the all-time high that we had before the crash, and we are seeing that level possibly hold up as resistance. We're still trading above the 13 EMA, and the price action is bullish back above the 5 EMA. We still see the Dow Jones has that really strong bullish trending as well, and all of these moving averages are stacked to the bull side and positive sloping. So look for the Dow Jones to possibly break out of this resistance level and come back up to the previous all-time high right around $300 and potentially start forming new all-time highs. There's no doubt with the vaccine news that the Dow Jones is going to be strong, and these industrial sectors are going to start having a recovery, and a lot of people are going to start flocking into these stocks as they start showing better numbers. So the Dow Jones is looking poised for a nice bull market run, and it's already had that higher high, so we just need to break out of this resistance level and it could be off to the races. On the VIX, which is our fear indicator, we see the VIX continuing to fall, going down over -4% today, and we still see the VIX looking like fear is leaving this market. The less fear we have in this market, the more bullish the market's going to be, and we're likely to continue to grind higher. The stock market does very well in a low fear environment, and if the VIX can come out and close below 21.3, we're likely heading back to that 18 level that we were at before the crash. Remember, a low VIX is low fear, and that is bullish for the stock market. Next up, let's go ahead and take a look at the US dollar, which actually attributed to a lot of the volatility we saw in the market today. At the market open, the dollar was well below the support level, and it looked like the dollar was going to head lower to another leg down. Remember, a weak dollar is a bullish stock market, and the stock market was going absolutely nuts while the dollar was trading down around $92. However, you can see the dollar did close back above support and above the 5 EMA, so we did see the stock market give back some of those gains that we saw in the morning. However, the stock market still closed in the green even though the dollar had a strength day, which is bullish for the stock market because it means that the stock market doesn't even care if the dollar is showing strength. We could likely see the dollar start heading back lower tomorrow because it still has a very strong bearish trend that's driving prices lower. So watch for the dollar to try to hold up above this support, and if the dollar breaks down and starts closing below support, it's likely that the stock market is gonna start running. Next up is gold, which had an absolutely terrible day and finally broke down below support, which we could tell because that bearish trend was telling us that the price action was starting to get pushed down. Now that we're down below 1860, our next support level and possible buying opportunity at gold is going to be down here around 1810. On silver, we saw another bearish day and we're still trading above support, but you can see these moving averages are all stacked to the bear side, and it's likely the silver price is going to continue to get pushed down lower by this bearish trend, and we could see silver back at support at 22.6 yet again. On Amazon, we did test the support trend line and it did hold up, but we still have a bearish trend on Amazon with all of the moving averages stacked to the bear side. The price action is still bearish, closing below the 5 EMA, and if the support level breaks down, good luck for the Amazon bulls because it's likely we're heading much lower. So if the Amazon bulls are serious about keeping the price going higher, they need to start closing back above the 5 EMA and reversing this bearish trend very soon because this chart is starting to technically look like it's going to be favoring to the bears. Next up is Apple stock, and we see Apple getting absolutely flushed on the price action today, going down almost negative 3% and closing below the 50 EMA. That's bearish no matter how you look at it because price action is king, and we would not see price action going below the 50 EMA if we were bullish on Apple. We see the 5 EMA did cross below the 13 EMA, and at this point it looks like Apple's either coming back down to 112 or 111.5 to close this gap. So look for that gap to hold up as support on Apple, and our previous resistance breakout level could also act as support, which is right around that gap, as you can see here, right around that $112 level. Next up is Tesla, and Tesla's still on an absolute tear, closing up over 6.5% today and getting up to our first price target at $522. That price target did act as resistance, and we see Tesla did fail to close above that level. If that level breaks, our next price target on Tesla is all the way up here at $575. So it could be a huge week for the Tesla bulls. If they can break back above 522, we could see a huge run up to 575 and we could get there in a flash. To the downside, we could have support at our previous breakouts of 503, and if we break below 503, we could find support at the 5 EMA or our previous breakout at 462. Next up is Nvidia stock, and we see Nvidia looking pretty bearish on the price action, closing below all of the moving averages except for the 50 EMA. So if the bulls are serious about driving Nvidia higher, they need to start bouncing off the 50 EMA and driving this trend back to a bullish trend. If the bulls can bounce from here, our price target remains at $571. Watch out below if Nvidia breaks below our support line, which is right around $516. On Boeing stock, we did find support at the 5 EMA where we closed on Friday, and we did get a nice bounce today, closing up almost 6% higher. So Boeing is absolutely back in that bull run, and we knew that because the 20 simple moving average crossed above the 50, and we have strong bullish trending on the moving averages. The price action continues to close above or near the 5 EMA, so as long as we have that bullish trending and the bullish price action on Boeing, it's going to be a buy the dip scenario, and Boeing is likely heading much higher. Our next price target on Boeing is around $230 to the upside. Next up is Bitcoin, and we see we're still closing above the 5 EMA as we start to approach our price target at $19,600. I do think Bitcoin is starting to run out of steam and running out of momentum, and when we get to our price target, we could see Bitcoin go into a consolidation and a correction. So there's not a lot of upside left on Bitcoin, and it does look like the bulls are doing everything they need to do to get up to this level before possibly finding a pullback and another potential buying opportunity. Right now on Bitcoin, I would not chase it, and if you're not in already, it's not the best time to be buying as we are nearing a possible top. A quick look at the sectors, we see industrials closing above the 5 EMA and still in that very strong bullish trend. On the financials, we're still above the 5 EMA and we still have that very strong bullish trend. On the healthcare sector, we see the bullish trend reversing and we're starting to see that 5 EMA cross below the 13, and the price action is holding up above the 20 simple moving average. So healthcare is not looking incredibly bullish right now, but if it can hold up above the 20 and start bouncing, we could see some bull market back on the healthcare sector very soon. So to pull this all together, we do see some possible signs that there is strength returning to the dollar, but there is that strong bearish trend that we have to acknowledge, and it's likely the dollar could head to another leg lower. That will be bullish for stocks, and we're still seeing a lot of bullishness in the sectors like financials and industrials. Tech looks like it could be waking up soon and start heading higher, and that could be helpful for the S&P 500 because the S&P 500 is over 30% tech. So right now I remain bullish on stocks, and I do expect to see the S&P 500 continue to climb higher back up to our price target of $363. If we break 363, it's off to the races and we could start talking about much higher price targets. But let's trade the market one day at a time and follow the price action and follow the trends. Don't forget, if you're looking for a trading community, there is the Stocks Channel Discord, and you can find out how to join the Discord server in the description below. Thanks for watching, everybody. Please remember to help me out by smashing that like button, and if you're new, go ahead and subscribe so you can follow along with all of my daily updates. Good luck out there, everybody, and as always, I will see you in the next episode.